Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Presently, the market bulls still remain captive by this 60-day simple moving average, which is around 66 cents to 15. In light of yesterday's weakness, the market is still attempting to try and recover in front of the level around 65.60 with the base holding potentially around 65.10.15. In economic data, yesterday's inflation data report showed that the consumer price index rose by 0.6% in the December 2023 quarter and 4.1% annually, according to the latest Australian Bureau of Statistics, or the ABS. It was only a year ago that the market peaked at 7.8%. With the latest inflation numbers showing a decrease, many economists believe that the likelihood of a rate hike at the February meeting is too low. However, the statement released by the RBA will be crucial following the announcement, which could determine the outlook for March. Meanwhile, the US Federal Reserve kept interest rates unchanged at its policy setting committee, a decision that was widely anticipated. Beginning his post-meeting press conference, Fed Chair Powell said he does not expect to reduce the target range until the Fed gains greater confidence that inflation is moving sustainably towards 2%. Viewing the technicals for the Australian dollar, I still feel the market will eventually break that topside level through 66.15 and then on towards a challenge of 66.65 and 67 2025. And as mentioned earlier, support comes in around the lows of 65.10.15. Viewing the euro, we can still see that the bullish divergence is still there, and I still expect to see a snap to the upside, which could eventually clear the 109.5, then on towards 110. We did have a brief stab there above 109 overnight, but failed to sustain, while the dollar index, which measures the greenback strength against a basket of 6 major currencies, still remains unchanged around 103.50. Any weakness should find support around the lows of 108, and as I mentioned, I do expect to see further gains eventually once the bullish divergence can snap through the midway point and therefore see a rally on that is supported by the RSI. The dollar yen is weaker and finally coming down towards this region, seen at 145.80.90. We did get a brief stab there overnight, but the market is still maintaining a bearish bias as the technicals are marrying up to support this view. It is anticipated that a break here of 145.80 could expose the region of 144, and then maybe reassessing or profit taking could emerge from this region, with any upside attempts likely to be unsustainable. Sterling, well, it's all eyes on the Bank of England today, which widely expects the bank to keep rates on hold at 5.25%. But the statement will be closely examined to see if there's any discussion about possible rate cuts in the near future. As we can see here, we saw a brief movement earlier in the week towards the lows of 126.10.15 and still serving as a good base. That goes back as far as the beginning of December. And therefore the market could actually see eventually a bounce and through the top side level around 127.5 and on towards 128 as the call still remains, and technically should improve these technicals if we see a move now above the 127 level. Wrapping up with gold and oil, well, the market is still firming into the fourth consecutive day and now close to its objective of 2052 to 4. If this level is reached, it is recommended to reassess the technical assessment, as profit taking may emerge anywhere above this area due to the recent 2 days that we saw here that came to the bearishness that the market when it broke above 50. So therefore, profit taking may again return. Any pullback likely to be shallow with a base holding around 2031. It would seem that profit taking once again returned to oil, but the market still maintains to a bullish bias with this inverse head and shoulders. Can eventually see or expect to see a rise up towards 78 and on towards $81 to $83 a barrel. Resistance was broken and now views the support somewhere around $73.5 to $74 a barrel. Well, that's a wrap. Thank you for joining me. As always, look out for the intraday report and I hope you enjoy the great start of the day.